All right, so in this video we're going to be covering baselines and how to set up a baseline indicator that fits for your chart. So if you wanted to, the indicator, which is attached in the description of this video, and it's also in the Discord next to this video as well. This is the default. Well, let's go see what the default is here. So reset settings. Okay, so the default is got all kinds of colors. The EMA is nice and short, and it's adaptive. So I'm going to take off adaptive. We're going to get to that. I'm going to take off the plot bar, and I'm just going to have the background on the chart. That's it. So you can see visually what's happening here. So as we can see, we've got lots of noise, right? There's blue, red, blue, red, blue, red, blue, red. And what we want to do, the objective of a baseline indicator is to minimize that so that we're not getting, is it bearish or bullish? Bullish or bearish? You want to have it so that it's nice and clean. So this is an EMA right now. I'm going to go ahead and just put the EMA to 25 so you can see the slower the moving average, the less noise there is. Now in some cases, there's actually a lot of noise. Still, even with 50, we still get a lot. Like look at this in here, right? Because it's hovering around that line. So a way that you can minimize that, well, two things. Number one, you might try out Trend Magic. Trend Magic just follows the price action a little bit differently. And you can change what the price, what the Trend Magic parameters are. Not here. It's kind of confusing a little bit, but it's actually down here, Trend Magic Atr Length. So based on an ATR of 14, how far do we want to follow the trend? And the multiplier is on 1 at the moment. So I'm just going to go ahead and increase that to try to minimize the amount of noise that happens. Yeah, so now there's noise whenever the price is hovering around the Trend Magic, but I mean, now we've got a better representation of the market movement on the background, because when it goes up, it's blue. When it goes down, it's red. And this, this is the kind of thing that we can filter out with other types of indicators. But that gives you an idea. That's one way. Another one would be Zlema. And you just test them, folks. This is the work. If you're scared of this kind of work, you should not be a trader. So this one here is, a Zlema on 50. That's not bad, right? Because when it crosses over, it seems to go for a while in that same direction. There's some things that we would have to filter out in there, maybe with a consolidation filter, or maybe a second line. We'll get into that. But you can see now, generally speaking, when that line gets crossed, it's a good opportunity to look for an opportunity. You can also make these adaptive. Now, what does that mean? So an adaptive baseline, adaptive moving average, is taking the last portion of this set of bars and applying more weight to the more recent movements. That's basically what's happening. And you can see a description of that when you hover over the tooltip for the adaptive baseline. And if you wanted to make that slower, you would actually look for a longer period of time across that. So it's kind of like this. This is your period here, taking the 50, but we're saying adapt to the most previous 15 out of that 50. And then there's smoothing as well, which is another thing altogether. And it shows right here how quick and what are the parameters, high versus a low smoothing setting. So I'm going to go ahead and make this 30, and you'll see that it makes it a little bit slower, but it still is adaptive. If that's not in place, it's a lot slower. And sometimes what happens is that the entry isn't quite right, or it's giving us too many false ones, or you're not catching it soon enough. So when we go adaptive, we can see that it can help with it. Now, sometimes it doesn't because of the way the price action is, but it's adaptive, and the ability to click that on and off obviously gives you the opportunity to find better opportunities. This case here, it's actually better without it, looks. I don't know. It all depends. All depends on what you want. So let's go through some of the other ones here. You can go ahead and you can show the period lengths. So this would be if you wanted to create an indicator underneath, you can do it that way. Enable expiration. So this is saying, okay, so if we have a crossing, how many bars do we want that to be valid? Okay, that's kind of nice, especially if sometimes you have some pullback. You might want to filter out the first crossing and be like, nope, but I want to wait until we get the second confirmation inside that period of time. And then we've got are able to filter fast crosses. So those would be like bankers candles, like this one right here. So it takes out that opportunity, saying, hey, we don't want to go in simply because that candle there is going to have a high likelihood of it reversing quite right away. We don't want to enter there. And then Atr Length and Multiplier. So that's for those fast candles. What kind of ATR are you using, and what's the multiplier of that ATR that you're basing how big that candle is? And then here's where we have the Trend Magic settings. And then this would be if you wanted to use Trend Magic as a signal line. And that's what we're going to get into next. So when you have a signal line, you're basically saying, I don't want the one line to be my indicator. I would like a second line to help me out with this. And so by creating that second line, you can reduce some of the other noise. I'm going to go ahead and make this 12, and we're going to see. Yeah, so now we've got a clearer, a little bit, not really actually. So we want to just maybe minimize that now. This might be a bad combination because obviously this is not a good place to go in short, right? So let's go ahead and change this Zlemma, and I'm going to go ahead and make it a trauma, just as an example. So by making it trauma, now I'm able to get a clearer, yeah, so here, obviously we don't want to go down here. So by changing this to a trauma line, now I'm staying, my moving average is staying above that signal line is staying above that. But you might notice, be like, well, it's kind of late in some of these downwards. It's not too late, but a little bit. So then we can just minimize this a little bit more. Let's go 20 and see this jump up a little bit. There is the opportunity, but that's actually not that much better. And it's because we can probably try some adaptive. That does catch that opportunity a lot sooner. And what you might do is turn this into Trend Magic and be like, yeah, no, you know what? I would rather have the Trend Magic because then we get even less confirmations. Yeah, even this entry here, you might hit a break-even point and not even lose on that trade, but just in case, take it because that could continue going downwards. You can make those adjustments as you see fit. Always use some visuals to determine whether or not your baseline is actually helping you. This, especially the first baseline that you put on the chart, you want to make sure that you've got nice, consistent, slower confirmations because you want to catch the trend quickly, but you don't want to catch it so quickly that you get false confirmations. And so these little things here, those are consolidations. There's not much you can do about that. And then you might be like, well, you know what? Actually, maybe I want the Trend Magic to be a little bit shorter, right? So then go ahead and just change that multiplier, bring it down to 2 if you want, and you can see, okay, now I'm catching these a little bit sooner, and play around. Make sure that you find something that works for that chart. This isn't bad. I can see that when the lines get crossed, when those colors change, there's some consistent movement in that direction. Not all the time. There's some fake outs, but there are other things that you can do to filter that out as well. For example, another way to use baselines is actually, let's go ahead and use this lemma again, but I'm going to put it up to 75, I think, and this one 25. Let's see what that does. It's not bad. Not bad there. Let's just minimize this a little bit. Yep, there we go. Cleaned up that weird confirmation there. And then what I can do is that I can actually change the mode of this baseline. So here's where we get into some cool details like dead zone, SSL, scalp. So you can change the mode of what this looks like. Dead zone takes the baseline and actually splits it into two. I'm going to take away the signal line here so we can see the exact effect that we're having. So here is Ars Lemma on 75, but there's actually a differential between the two moving averages, and so we're actually creating a space. What this does is it allows you to have a more secure entry in some cases, a more secure entry. It may be a later entry, but it will be more secure. In some cases, again, like you got to test this stuff out. You don't just blindly do this. You want to make sure, right? And so you can see here we've got that false breakout there, right? So then that means maybe we have to increase the multiplier in order to filter that out, but still catch this downward movement. So then we increase the multiplier incrementally. Let's go to 1.5 just out of curiosity. Might be too far, but we want to get it past this point. Yeah, so now we're past that fake breakout, and now we're getting the confirmation on the way back down. So this is actually a pretty nice setting. Not bad. And then what you can do is that you can use, in conjunction with that, you can use the baseline, the custom signal line as well. But that, use it wisely. Obviously, this is a long upward movement. You don't want to be having that red, right? And when it is red, maybe that is an opportunity. That doesn't look too bad. All right, let's check out the other ones. Other modes here. We've got dead zone. Let's go to SSL. This one here is a static differential. I don't remember what it stands for, but basically you can use a tooltip as well to see what these different things do. Scalp, so it leaves the dead zone. When it comes back into the dead zone, we're looking for sells. If it's going below and it comes back into the dead zone, we're looking for buys. Then we have differential. Now it's like if it's outside of the dead zone, we're going to look for anything. So maybe it's a reversal, but maybe it's a continuation. So this allows you to catch movements. As soon as it leaves the dead zone, you want to look for opportunities, long or short. And whatever other indicators you're using to dictate that is going to be helpful there. Then the differential inverted, saying the other way around. While the price is inside, we're looking for either a buy or a sell. If we leave, we're going to wait until we come back in to determine what we're going to do. So that can be helpful. But then again, using differentials, just the straight differential can be nice, especially if you notice that you can catch some consolidation. Right? When the price is in range, like right here, you don't want to be taking trades. So that can be nice in some market conditions. If you have any questions, definitely leave comments within the Discord related to this topic, and we'll be sure to get back to you and help you. And maybe I can create another video to answer specific questions. So thanks so much. That is how to use the baseline indicator.